Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting this Asian session live market analysis today on 26th of May between 5 and 5:30 GMT. I will give the derived forecast for this particular week, 26th to 30th of May. This is the last week of this month of May. So you know that last week and the first week of the months will come across the monthly trend reversal moves. So we have to be cautious while taking positions in the market. The players are expected to make either way quick moves. So we have to limit the risk and maximize the profit utilizing such a scenario. And also I'll try to give the levels in which the currencies are expected to trade in this week. Besides, I'll also explain to you the method of market reading using the live market code page and how with the initial low and the high, we compare the market from time to time and understand what sort of moves they are doing it in the market. Thereby, which will be able to give us a guidance of which way we can take positions. Either we can do a buy and sell trade or a sell and buy trade. In spite of that, of all the studies, there could be an element of error associated with the trading, as long as it is human decision, and suddenly it may become subjective without our knowledge. So in order to objectively handle the position, we use the trading strategy. So even though we do a sell and buy or a buy and sell trade, we try to keep the hedge order to limit the risk. And the hedge order can be 30 pips because the market moves normally varies from that of the 15 to 23 pips. And if we keep about 30 pips hedge order, it is unlikely to be hit unless and otherwise we are taking a wrong position. And in the event if it is hedged, we try to handle the hedge. As a result, we are able to do either way trades or keep stop at entry in the hedge, let them make the move away from us. And subsequently, when they make the move in our favor, we'll continue to trade. So that sort of advantage is there. And only if we have the positions in the market, we'll be able to continue to trade. And if you subsequently book losses or stop out the positions for 2-3 times, then we become more defensive without our knowledge and we hesitate taking positions in the market. So invariably, we find that the emotional plays a vital role in the trading and the profit making. So in order to avoid the emotion, the influence of emotion on our trading, we use the hedging to limit the risk, and we use the stop at entry once the position makes profit and trail the stop to maximize the profit and also trail the take profit order. So with the help of the forecast and the market trading to fine tune the forecast, still we use the trading strategy to limit the risk and maximize the profit. We will be in a position to consistently earn from that of the market. So this is the expected market moves chart for this particular week. And it is the last week of the month. So you normally come across the monthly trend reversal moves. So market is expected to be volatile, but with a downward bias. And suddenly they will make a drop and gain nominally and then make a drop, and that sort of moves are expected during this particular week. And you know, these are all the 3 sessions, and I explained to you here the session-wise moves. So if the session-wise move is swing and drop, that means a higher level swing near that of the high, and then drop to that low or still lower than that. Then drop means below that of the initial low, and then firm up. Then subsequently swing and slide means it will swing at the higher level and slowly slide down. And this sort of moves are expected to happen in the market during the sessions. So the session timings are given here. And in between the session, you come across the gap time. During the gap time, you come across the false move, which will also indicate what sort of moves they are going to do it during the next session. So that way, we'll be able to confirm, following the false move, what way they are going to drop or rise. Then accordingly, continue to hold the trading positions or just book profit and re-enter on the opposite side and book profit in a swing trade. So Normally, if you take the position during the early part of the session and close it near that of the late session, you will be able to consistently earn from the market within that of the session. Normally, they don't change the trend. Intraday trend reversal happen between the sessions. So today, 26th of May, swing and drop moves are expected during that of the Japanese session. And if the volume is low, they may make a slide, and then you may come across some more drop and stop hitting. Hitting the stops at the lower level, below that of the psychological level. In the case of Euro 1.36 and the case of JBB 1.68. And then subsequently they form up. And later on, they're expected to make the swing and slide move during that of the US session. Then tomorrow again, they are expected to make a dip and then form up during Japanese session. And then swing and drop moves are expected to happen during European session. And swing and slide moves are expected during the US session. So overall, you come across that predominant of the time, you come across the market is expected to make a downward move. That is, Euro and GBP are expected to make the downward move. Then 28 Wednesday, swing and slide moves are expected during Japanese session, and swing and firm up moves during European session. If they are not firming up, they may simply hold it. And then later on, swing and slide moves may happen during that of the US session. Then on 29th, they are expected to make an initial drop and firm up, and then swing and slide during that of the European and US session. And then swing and slide on Friday during the early part, that is Japanese session, and the European session, a drop and the form of move. And in a bearish market, normally they just induce the short covering for the late short sellers to go in for a short covering, and also those who have taken the sell positions to book profit before making for the downward move, because the players wanted to build huge sell positions before making a big drop and reverse the market. So they will induce anybody who has taken the sell position to do the profit booking with a nominal profit, so that they can make a downward gap opening and continue to make a downward move, etc. And so that they'll be able to do the position trade during the downtrend of the market. But the traders might be given frequent fear, so that the traders will continue to do only swing trades. Then next week, it will be the first week of the new month. Again, trend reversal is expected to happen to 2nd to 6th of June. So the volatility with a downward move is expected to happen. And in the month of June, the market is expected to make a visible downward move. Euro and GBP are expected to make visible downward move. And overall, you could come across the visible USD gaining moves during the month of June. Then afterwards, you'll come across the reversal in the market in a big wave. Then Euro and GBP are expected to make new highs in coming months afterwards, from July onwards. So the expected low and the expected highs are given here, and also what is going to be the trend. It is a middle level swing and drop moves are expected to happen in the case of Euro, and 36.50 could be the high. They showed 36.41 and currently holding around 36.15. They are not breached the low or the high. Here in the code page, you come across Friday's high, 36.88. But if you see in the trading platform, you can see that 36.41 is the high. Then GBP 68.27 is the low, but they could go down to 64 level from 68.50, and 68.46 is the high. Then in the case of yen, 101.93 is shown, 101.75 could be the low, and 103.75 could be the high in this particular week. And in the case of CHF, you can understand slowly they are gaining the level similar to that of the drop in the case of Euro. And 89.50 is the low, and 91.75 could be the high in this particular week. So far, they have gone up to 89.66. Then Canadian dollar is expected to make a big rally on the upside. 1.0875 could be the low. They have shown 1.0866 as the low, and 65 the new low. And 1.1150 they could show it And so far, they've gone up to 1.0874. Because if you see in many of the analyst forum and also other places that they expect Canadian dollar either to go to 1.11 or to 1.06. That is how they are trying to do it. And they give either way possibilities depending upon the momentum in the market. But the forecast says that it is expected to make an upward move. Then Australian dollar, 89.50 could be the low. So far, they are shown 92.31, 92. 25 could be the high, but they are holding above that 90 to 45, and they are expected to come down below that quickly during the day. Now, coming to that of the market trading technique. So euro formed in the low 1.3615, the high was 1.3641. They have not breached the low or the high. In the case of GBP also, the low or the high are not breached. And in USDN, they breached the low 101.93 and formed the new low 101.87. And then they come up to 92. They are holding it below that of the initial low. And they are expected to make a contrarian move on the downside along with that of euro and GBP, it appears. And later on, they will try to reverse. And CHF 89.54 is the low, 89.66 was the initial high. They just cut it and formed 89.67. Market moves are very slow, but still they are indicating which way they intend to make the moves. And USD CAD 1.0866 was the initial low, and they just breached it by 1 pip, 1.0865. And they are holding there probably after a brief downward stop of 2-3 pips, and they could gain and breach the high. And you see that both USD CAD as well as Australian dollar showing positive net change, that they are expected to make the contrarian move on the upside when euro and GBP are making the downward move. Australian dollar 92.31 is the low, 92.45 is the high, and they are expected to gain the levels afterwards initially to start with, and later on we will come across that they will breach the low and come down along with it of euro and GBP. And you know that they always start with it of the commodity crosses and the commodities, and then subsequently to that of the N crosses and the yen, and then later on to the majors, and finally to that of the European crosses. That is how they bring in the trend reversals. So follow that and try to take positions accordingly. And so now you find that they are not breached the low or the high. In the case of euro and GBP, only in the case of yen, they just breached the low and staying below that. And Canadian USD CHF by only 1 pip, Canadian dollar by about 1 pip, and Aussie, they are not breached the low or the high. So sporadically they are making the stop-ins here, but not a significant move as such. And they are mainly the consolidations. So unless and otherwise the spread becomes more than 40 pips between that of the low and the high, don't commit any position. Let them bring in the momentum in the market, and later on commit positions. You'll be able to quickly earn money. If you try to take positions now, probably you may have to hold it for a long time. So we note down the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs, and we try to make an entry once the spread in a currency is more than 40 pips. In the cross, once it is more than 70 pips, only then we commit positions. And later on, we keep 30 pips hedge order to limit the risk. And once the position makes profit, keep stop at entry about 25 pips, keep stop at entry and remove the hedge order. Thereby, we eliminate the risk to nil. And then later on, we try to keep about 45 pips or 75 pips, take profit order and trail the stop, depending upon the momentum in the market, and try to close it either with the trailing stop or with the taking profit order or the limit order. As a result, we find that we try to maximize the profit but we don't maximize the loss. So for that, we try to use the hedging order. So if you've got any questions, you can ask me. Meanwhile, I'll also explain to you with regard to the market timings for the newcomers. So in a day, the players have divided into 3 sessions. That is Japanese, European, and US sessions. And in between sessions, we come across the gap time of 30 minutes. Here between the Japanese and the European and the US, about 30 minutes. And between the US and the next day Japanese session, there is about 4 hours gap. And each session is further divided into early, mid, and the late sessions. Early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. So every session is of that nature. And always they take only 2 pairs at a given time and try to make the moves in them. And then subsequently you come across the market is making the moves in those 2 majors as well as the respective crosses. That's how we identify which currency they are active at the moment by seeing the spread. If the spread is not very high, and that means they are not interested in handling that particular currency. Why they are not interested? Because the traders have not committed adequate positions. Once the traders have committed adequate positions in a currency, then they try to make a false move to start with, a cunning move, so that the traders will think that what they have done is correct. So they will be able to gain profit, but suddenly they will reverse and make an opposite move, and the traders get trapped. This is what happens every time. So only when they make more than 40 pips spread, and also whenever there is a quick move, all the quick moves are false moves in the market. And when they quickly gain the levels, stop cutting the new high for 30 minutes to 2 hours, then take a sell position. We'll be able to see the profit when they make the slow downward move. Similarly, when they quickly make a drop and stop cutting the new low for 30 minutes to 2 hours, you'll find slow gaining happening. At that time, if you do a buy and sell trade, you'll have a definite profit. So that way, we have to understand the intentions of the players and try to trade accordingly. So there are questions coming, so I'll answer to those questions. Meanwhile, I'll show the last slide. That is, I'll come back on 29th May, that is Thursday, and do the review of the forecast, what I've given it, and try to explain to you what is going to happen in the market in the subsequent weekend time. And also tomorrow, I'm going to give the Tracking the Forex Market Together, a monthly twin webinar, part 1 and part 2. Part 1, I'll be presenting by 9 GMT and part 2 by 13 GMT, the gap time before the start of the US session. So I'll try to commit positions during that of the early part 1 and try to show the results during part 2. I'll try to commit the position before you based on our market trading technique, so that you'll be able to really understand how we can take quick decisions in the market to earn consistently. I'll answer the questions which are asked here. Okay, Will has got a question. He is thanking for the updated forecast. Went exactly as planned. Okay, thank you very much. That is what, I wanted to give it to the traders so that they can really understand how the players are making the moves in the market. And if you try to follow it carefully, then you'll find trading becomes much more easy and with less tension. Okay, the question from Will is, do bank holidays really mean anything for moves? Yes, to a certain extent, the bank holidays reduce the volume. As the market volume is reduced, and if there are bank holidays, then the moves become very subdued. About 4-5 years back, during the bank holidays, the players used to make massive moves. And even the holidays, some of the Christian holidays, they try to make big moves like Good Friday, etc. Because many of the countries it is holiday, and one or two countries it is not holiday. In such a scenario, they used to make very massive moves. But nowadays, as it's the volume has come down drastically, and when the banks are on holiday, then further downward uh, or the reduction in the volume is noticed. As a result, we find market becomes stagnant. So very unlikely we may see big moves in the market when bank holidays are there. So the forecast gives the expected market moves independent of the holidays and the events, the data release, etc. So we have to fine tune it using all the other input like the data release time and also the holiday and also the market timing, whether they made the spread between the high and the low, with which we'll be able to confirm it. Then Eric Daniel, for explanation of USDN expected to drop lower today. USDN is expected to make a brief downward move. Probably it may come to 101.77 and then probably not much, about 5-10 pips. They will try to make a downward move because already they started making the contrary move in USDN along with that of Euro. So see how exactly they are doing it. In the case of USD CAD and Australian dollar, it's a contrary. Both are positive net change. So here both are negative net change. It's a contrary move. In such a scenario, and also Euro negative net change, JBP positive net change is another contrarian move. When they are doing contrarian move, read it properly that they are only doing contrarian move, no USD gaining, no USD weakening. And if you look into that of the US dollar index, the index would have been unaltered. But here they will be making the moves. So that we need to understand. And only when the spread becomes more, we can commit positions. Till such time, you watch how they are handling the market. Because they set the initial lows and the highs, and also in the case of majors, and followed by that, they do it in the case of the crosses. And later on, once the traders commit more and more positions, then they try to squeeze the traders. Till such time, they will only make swings. And in the holiday time, when the market volume is not adequate, then they may make even subdued moves. That we should be prepared. For that, you need to refer to the calendar, whether it's a holiday or not, and also when the data release is expected to happen, etc. Then, telling us the session times. What are the months when these session timings change? Okay, these session timings changes from actually from March to October. You come across the daylight savings time. Till this time, we'll follow the same time. Afterwards, we'll follow when the daylight saving system is off from November to March, we'll come across the other timings. Do you see S&P 500 breaching 2000 before spring? It is unlikely. The stock market is making a good headway on the upside, but they are expected to reverse from July. Eric, I will gold trend move this week. Gold is expected to make a range bound moves from 1310 to 1280 range for some time. May you please comment on Euro Yen? Euro Yen, again, you find that they are making a contrarian move on the downside. So Euro Yen have dropped drastically because Euro has undergone a drop. So from 142, it has come to 138 level. And they are keeping it in a very narrow range. Unless and otherwise they make 70 pip spread, don't commit any position there. You may not be able to book profit. Since both are negative net change, you find a cumulative negative net change is seen in the case of Euro Yen. It is expected to make a brief downward move when both are coming downward. And later on, when USD Yen goes up, And euro drops will find a nominal downward move will be seen in the case of euro yen. Then calculate. What direction the Aussie this week? Aussie is expected to make a downward move. Initially, it will just make a brief upward move, just to pretend as if the entire market is going to go up. Probably they will try to make an upward stop and are above that of 90 to 45 and hold. Then as an extreme-led move, then people might get that impression that other market could go up, but actually that is to handle the commodity crosses, Aussie crosses. Then later on, they are expected to make the lead in the case of Aussie. Aussie is expected to come down much more faster when compared to Euro and GBP. So as I explained, it can go to 0.89 area soon. Then Aditya, USDN and other yen crosses have not cut a new low for over 2 hours. It's a good time to take a buy. See, when the spread is not there, sir, probably you have to wait for them to increase the spread, then commit positions. See, use all the input given. Don't only use only one input given and try to come to a conclusion. The conditions, you have to see whether they are fulfilled, then commit positions. Then BWNRF. What about New Zealand dollar? New Zealand dollar is also expected to make the slide, probably a small firming up. You can sell around 85.50, 85.60 level. You can take a sell and wait for the drop to happen. And George. And gold, I explained it that 1310 to 1280, that will be the range. Then Yohanathan, and GBP levels. Yeah, I'll show the levels and also the. Okay, I'll show the slides. So tomorrow I'm going to present Tracking the Forex Market Together webinar. Kindly attend to that. You'll be able to really understand how my trading decisions are going to be and also how I handle the trades. You'll be able to understand. And those who want to know more about how to handle hedges can follow that during that time. And River, Euro GBP crossed to fall under 80. Yes, Euro GBP is expected to come down to 0.78 area slowly. Then money, how about silver, which is also going to be in a narrow range, not a big significant profit-making trades can be possible in metals to start with this week. Because the players are going to focus more on the Forex market. So these are all the expected market moves this week. So they are expected to make more of a slide this week. So watch, and whenever they are making a quick rise or a firm up, you try to take a sell position and book profit during the slide once they stop cutting the new low for 30 minutes. That way you can do the swing trades, because normally during the last week of the month and the first week of the new month, it is better to focus on swing trades. Don't do position trades now, then you may get struck. Then expected ranges for this week is also given here. You can make a note. Otherwise, this webinar is being recorded and you can get it from the recorded webinar. You can visit it again later and find out what levels are given and where the market is from time to time, and then try to take the trading decisions. See, the main purpose of recording the webinar is to keep it available for those who cannot come and attend the webinar, the live webinars, because people belong to different countries and have got the different time frames of the days. So all may not be able to attend. So in order to facilitate the traders from different countries, because now if you see that in uh, Europe, it is early morning and it will be late night in US. So you find invariably that all the traders may not be able to follow the webinar. That is the main reason that FX Trade is recording all the webinars and displaying it under the archives of the webinars. So if you want to really get the information, then probably listen to the archived webinars. You'll be able to really find some useful information. And they record only that are the webinars which are really valuable and helpful to the traders. So keep that in mind. And they are putting in so much of effort and recording the webinars. So you should also get the real benefit of that. And see, the laziness is part of the fatigueness during trading. So whenever you continuously watch the market and also either the live market code page or the charts and things like that, mentally you become fatigued. And anybody talks about anything, you may not be interested to listen to. And you will be only praying to God that the price has to move in your favor. So in such a situation, when anybody gives an advice, it might be sometimes giving irritation to you. But keep in mind that you have to objectively trade and also learn properly and don't become glued to that of the market. Then it can easily trigger your emotion whenever they make surprise moves. So if you learn as much as possible about the market from various authors and various analysts, then you will be able to develop your own understanding of the market. Then that will help you really, so that first of all, you will avoid becoming surprised. So once you avoid becoming surprised with it of the market moves, then you become a successful trade. So you will also will not place in chat or any other place, wow, what a move it is, what a spike it is. If you just express like that, that shows that you have become involved with the market moves. That means the players have become successful. So stop using such words while describing the market so that you will be able to control your emotions. Ultimately, emotional control is going to help you in perceiving the market with the right sense. So Will has got a question. Would it be fair to say that we should be able to watch for stop-ins today for potential positions further in the week? Yeah, because normally during the week beginning, they will make the week beginning false move. But this is the last week of the month, so they will make either way stop-ins to start with and induce the traders to commit positions wrongly as a breakout trade. So when they make a quick upward stop-in, you can take a sell as you have said. And keep 30 pips hedge order to limit the risk. And once the position makes profit, keep stop at entry. Then you can think of position trade or slowly trail the stop in a profit-making position and earn. So I take this opportunity to thank everybody and see you tomorrow during that of tracking the Forex market together webinar. I also wish to thank FX Trade for the facilities provided to present the webinar. And I thank you all for your patience and listening to me. And develop patience, and that is going to be the virtue in making us becoming a successful trader. Thank you.